What's up, guys? Welcome back. After a year of primarily buying calls, doing the poor man's covered calls with Leaps options, I'm finally going back to my bread and butter. The first option strategy I ever used that I learned with for years that really made me successful to the point of where I am now. I just posted a video last week about I'm projected to have 165% return on the year at the midway point of this year, 2021. So I want to break down real briefly what the wheel strategy is, its parts, and the wheel strategy in general I've made in-depth videos on, but kind of want to talk to you about why I'm going back to the wheel strategy now and why it might be a good idea for you too. First, before I talk about what the wheel strategy is, if you've never heard of it before, I'll get the elephant out of the room. Why am I going back and doing the wheel strategy now? Well, to be honest, I got called out by another YouTuber on an investing challenge. That's right. The one, the only, JJ Buckner said, "Hey, I challenge you to an investing challenge." I said, hold on one second. Investing challenge? Tell me more. Tell me more. And that's really why I've decided to go back to the wheel. A few things I'll say no to with a Budweiser and me, but what are the rules? Okay, so JJ and I, we have a relationship. You guys know we're friends. We have the Average Money podcast where we get away from YouTube, kind of just shoot the breeze. If you've never heard of that podcast before, I'll link it down in the description below. But we've been saving up for years, literally, to buy an investment property together as business partners. Well, if you've been living under a rock, real estate is not particularly easy to buy right now. Prices are inflated. People are getting way over ask. It's ridiculous. And, you know, the money side of us just hated having money sitting in the bank. Like hundreds of thousands of dollars sitting in the bank. So we said, hey, let's have some fun with this money. With our experience, we should be able to at least return a little bit at a low risk, a low amount of our actual bankroll. If a real estate property comes up, we'll sell it off. But I said, okay, you know, what do you want to do? And he said, yo, you take 20 grand, I'll take 20 grand. And let's see who the better investor is. And it's kind of crazy because we have two completely different philosophies. I think it's more of like our age. He's 30, I'm 39. I tend to be a little bit more conservative. 94% of my net worth is in index funds. I'll be making a video about that later in the week. He tends to YOLO a little bit more, although he has a really strong base in index funds as well. So I said, I know exactly what I'm going to do. I'm going to do the wheel strategy with some amazing stocks that I think I can use the wheel strategy with. And I think, I mean, he's got to do really, really well to take me down. And so let's talk about the wheel strategy. Let's show you exactly what stocks I'm going to be doing it with. And also, too, we're in a different brokerage. We're using Fidelity. So a lot of my options videos, I've used Robinhood. So let's take a look at Fidelity even, and we'll see the moves he's made. We're 1 week in. We'll see the moves he's made, the moves that I've made. And then if this video gets a bunch of likes and you guys want to see it in the comment section below, maybe I'll do an update on this weekly, monthly. I don't know. I got a lot of challenges and updates and stuff to do. I don't know. Leave me down in the comment section below. Team Brad, Team JJ, I can take it. You think he's going to smoke me, or you think I got this guy? All right. Here is the wheel strategy. The wheel strategy has two parts done independently. It does not matter which part you start on. It's really personal preference. I'll give you some examples of when I go one way or the other. Once again, in no particular order, the first one is by selling a put option, sometimes known as a cash secure put. If you do it with margins, called a naked put, not something I do very often, but a cash secure put says we are going to sell a put, collect options premium, hope the price stays up, it expires worthless, and then we are going to repeat. And in the process, we collect premium from the buyer of that option. Like I said, I have a full in-depth video on what the cash secure put is. I will leave that down pinned in the comment section below. You can check that out if you are a little new and you're still putting the pieces together on the wheel strategy. When you are assigned on a cash secure put, you need to buy 100 shares at the strike you chose. So now you have 100 shares of a stock upon assignment. Once you get exercised, now you have 100 shares. You are going to do the second part of the wheel strategy, and that's going to be selling a call against it, or sometimes known as selling a covered call. Instead of using cash for collateral, now you're going to use the 100 shares. Once again, you're going to pick a strike price. You're going to hope the price stays down. It expires worthless. You keep that premium and you repeat. If and when, because you will be assigned in the wheel strategy at some point, then you have to sell your 100 shares back. So now you have that cash collateral again, and you will repeat cash secure put, covered call, cash secure put, etc., all the while keeping your strikes on your covered call above your basis so you cannot lose, and picking a cash secure put at a price that you would want to buy 100 shares at. It's as simple as that. The reason I loved it as a beginner is because there's always going to be an exchange of cash or money, right? When you buy options, you pay premium and you can lose that, right? If that expires worthless, you lose money and you get nothing in return. Same thing with spreads. If you do a credit spread and it goes bad, you lose that collateral. But in the wheel strategy, you collect premium, you choose the strike, and then you either sell 100 shares at that strike price that you chose. So you're happy with the strike price because you said, hey, I'm cool selling off these shares at this price. And the same on the cash secure put side. Yeah, you're going to lose some cash, but you're going to get 100 shares. So there's always at least some exchange of, asset when you do the wheel strategy and you do covered calls and cash secure puts. That's really why I love them the most. When I was starting as a beginner, I could control the price that I was selling and buying, and I got a little bit of premium in return. Now, there is a little bit of learning curve. You got to learn how to get assigned, and there's an emotional side of that. And like I said, I go into that in the videos, and that's what I'm going to be doing with this particular challenge, mostly because I can't do the poor man's covered call yet, because with companies like Fidelity that are a little bit more reputable than Robinhood, it's harder to get approved for level 3 options trading, which is what you need if you want to do the poor man's covered call, which takes on Robinhood, you could just do it, I guess, if you want to lie. But until I could do that, I really had to go back. And I didn't want to just buy equities. I wanted to utilize this safer, in my opinion, option strategy. Let's look at the moves that I made this week. And I think I'm winning currently. When I looked yesterday, I was winning. We'll see. Let's look right now. All right, so here is my chart so far. Like I said, we started each with $20,000, and this is just for us to keep track and see like our net, because we like to close options as well. So I first started off my wheel with the covered call side. So I bought 100 shares, okay, and I'm going to sell covered calls against it. The first one I chose was Apple. Now, guys, I know that's all-time 52-week highs. Oh, everything's inflated. Guys, I don't care. Apple's going to go up, right? It might recover. Yes, it's very close to its 52-week highs. I don't care. I'm looking to get it assigned and sell it eventually anyway. And the best part is I got this for $143.29. Okay. The call that I wrote right away, sell call. I haven't closed it yet. I'm probably not going to be closing that many. I'm going to look at about 75% profit is going to be my strategy to close. I didn't have to put up any money in collateral because I put up my 100 shares of Apple to do so. And the strike price I put was $149. It looks like it might get assigned. So boom, right off the bat, $149, I'm going to make $600 in this week if that's the case. And then what I'll do is I'll sell a cash secure put of Apple at probably like $147 and get that money back. It's going to be great. So far, that call with fees, because Fidelity does have fees, I got $146.31. Now, what was the fee? I think the fee was 60 cents or so. I think this was like a $147 limit call that I made. The other buy that I made was VUG. I had $2,000 burning a hole in my pocket. I'm not sure if I'm going to add to that position, but I'm a lump sum investor. I don't really time the market. That's not for me. Dollar cost averaging. I've done too much research on missing the good days versus avoiding the bad days. The markets, they just go up. So I had this money burning a hole in my pocket. If I see a great covered call or cash secure put opportunity, I might take it. So that was like the first thing that I did really to open up the account. And right there, I went up $46 and right, that's right. I went up quick on JJ. I went up quick. Sorry, JJ. I'm fast and furious. The next two that I wanted to do were I wanted to start on the cash secure put side. And that's just because I wanted to keep the collateral available to me. I could close the option, get my collateral back, and then use it somewhere else if I really wanted to do so. So what I did was I sold 2 puts right away. This is Tattoo Chef, and this is on Vuzi right here. These were the premiums that I collected, $74.31, $86.31. This strike right here was $17, so I had to put up the collateral of $1,700. So right now, this deal, right now, if I got assigned, right, that's what I'd have to do. But I'm going to hope this goes to worthless. This goes to 0. It's not going to be a big deal. My collateral will be released to me. The first Tattoo Chef one, I actually closed it. I closed it for a price, so buy to close, $27. So that netted me $47.28 right there. Boom. I got my collateral back. That's why this got released and is now 0. And then I used that collateral to sell a put again a little further out. Tattoo Chef, they only do monthlies. So they have a July 16th, which is coming up this Friday. That's the one I just closed. This will be August 16th. Now, to be honest, with the movement and assignment, this might get closed, probably going to get closed a few times in the next month, and we'll switch it back. I like monthlies this time of year because it's summer. I'm crushing beers, hanging out, and I don't have the patience or the time really to look at my weekly options. This was a strike of $22.50. I have no problem spending $22.50 for Tattoo Chef if it ever gets up there. Right now, trading about $20 or so. So I was happy with that collateral. And like I said, a ton of premium. Now with all of these right here, right, I only have $165 remaining in my 20,000. What's that going to be used for? That's going to be used for things like this, to buy to close. If this gets to like $150, I'll probably spend $150, close it, lock in that $150 profit, and then move forward again depending on what happens. So like right now, I guess we can say I'm up a bunch if this gets assigned. Apple's up a couple $100 for me so far. Then this one is the only one I've locked in, $46. So because it's the only one that's locked in, right now we'll say that I'm positive $46 and everything else is looking pretty good. Here's your boy JJ, who's a little bit more conservative. He likes to wait on things and he likes to shop around and find good deals. Spends too much time in his office during the summer, if I do say so myself. But I think I kind of bullied him into it. He's like, you got off quick. He loves PLTR, so he did it on the cash secure put side as well. He's going to be doing the wheel. Like I said, he knows the beauty of the wheel strategy as well, just as well as I do. But I think he might be waiting for something a little bit more YOLO-y. He got $30.31 for this at a strike of $22. I do not know what that's currently trading for. That's his it's his bag. I said baba. But this is Alibaba, I think. Like I said, not too familiar with the things he does, and I don't follow what he does, and he shouldn't follow what I do. We have our own philosophies. But he bought a bunch of shares. I think that's 10 shares worth. So he can't sell covered calls, but he's still got $15,769 liquid that he can mess around with. So here's the portfolio as a high. We can see my Apple position right now. Total gains up $478. It's almost at that strike price. This is the wheel strategy. I've said in my poor man's covered call, I protect my leaps option. There's no leaps option here to protect. I made a strike right at the money for the most amount of premium. That's just where I'm at with that particular strategy. So I'm up $478. If that gets assigned at $149, I will be a happy camper considering my cost base is $143.29. So that's up like 3% this week. Still moving. All-time highs. All-time 52-week highs, Brad. What a donkey. We'll find out. Here's his Alibaba move, also doing really well. There's my VUG. Right now, it's up $5. We'll see what happens with that. That's more realistic for a week. Here's that call on Apple. It's saying negative because it's getting so close and we don't want to get signed, but I don't really care that much, right? Right now, the premiums on that are $78. I did them for $46, so that's not a big deal for me. Worst comes to worst, I always keep this $46, but I will get the difference in my cost basis of $139 and $149. So that's going to be a $600 win if that does get assigned. Here's that put. All these things in the red right now. I got it for $311, currently trading for $340. All that means if I would have been a little bit more patient today, I could have got myself another $30 or so. Here's his put. He got it for $30. Right now the value is $58, so he's going to let that run. And then there's my Vuzi 17. The overall portfolio right now up $318. So we started with 40. the both of us combined, which at the end of the day, we are on the same team here because this is hopefully going to buy us a house. We were at $40,365. Better than sitting in the bank. If you see this video the day it comes out, we are getting live on the Average Money Podcast YouTube channel tonight to discuss this particular challenge. Get over there, hop in the live stream. It's a pretty good time, usually around 8 o'clock Eastern. Average Money Podcast, check that out. And we do pretty much live streams every single Wednesday night over there. Guys, I'll leave a full in-depth wheel strategy up here, and then I'll leave some cash secure puts and some covered call videos. Like I said, I'll also link them down in the description below. And until I see you guys in the next one, stay positive. Work really, really hard always. Please be kind to other people. Unless they challenge you to an investing challenge, then talk as much shit as you want. JJ, you're going down, buddy.